Hello everyone, and welcome to the second of our webinars today, our Forex webinars. We've got another webinar later on this afternoon, but we'll be looking at the indices and possibly some stocks as well, because we've been doing a lot of analysis and trading of some US stocks. So if you've joined us now and you want to come along later, you are more than welcome. Before we start, as usual, can I just draw your attention to the disclaimer, which I know you can see on your screens. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So let's get that away before we start. Very quickly, oh, here we are. This is us, sorry. I'm getting confused with my mouse here. This session, as always, it'll be myself and David, and we'll be looking at what's going on in the wonderful world of Forex through the prism of volume price analysis and the quantum tools. That's on the technical analysis side, but it's all, as you know, it's not just technical analysis that drives the prices in the Forex market. You have to look at what's going on in the fundamental landscape, and also what's happening in related markets. In other words, equities, bonds, and commodities. Now, I know to these sessions we have people who come along, traders who come along who maybe just bought the books. We have traders who have invested in some of our indicators or are thinking of investing in the indicators, and would like to learn a little bit more about them. I'm more than happy to share that with you. And also, I know we have some of our Forex program students as well. David and I put together this very comprehensive program which sort of builds on the concepts that are available in the books, plus the indicators. It's a self-directed program, and we're really proud to say that of the hundreds of students who have taken the program, the vast majority of them are all trading quite happily and successfully. It doesn't mean the rest of them aren't, it's just that it's a self-directed course, and how long you want to take to absorb all the information is pretty much up to you. I think on having had some feedback from our students, you can, David, how long would it normally take if you really did it, sort of, you dedicated some time during the day? You could do it in 3 months, do you reckon? Yeah, if you did a little bit every day, by the end of it, you would certainly have a really deep knowledge of price action, VPA, and all the other elements that you need to become a successful trader. Risk management, the mechanics of trading, etc., etc. I'll bring up the website later on, and it just gives a rundown of what you get for the program. So it's very much self-directed. David and I are always there in the background, and we run these webinars as well as sort of extra support, as it were. Right, so that's that. This is one of the slides from the program. Very much really encapsulates our approach to this market. You have Forex, but you really have to understand the relationships between the different capital markets and how they kind of bounce off each other and how they affect what is going on with the price action on your chart. And it really doesn't matter whether it's a fast chart or a longer term chart. All these markets, they're so intimately connected, and with the Forex, each of the currencies has a role, if you like, in the market, and depending on what's happening elsewhere, will either help to drive that currency up or down. And for Forex, we've developed very specific indicators that we call the part of the currency dashboard. All the indicators available to buy individually, but for Forex, we have what we call the currency dashboard. We start with the currency strength indicator that disassembles the currencies into the individual currencies, and we can see what's being bought and what's being sold in lots of different time frames. Then we have a matrix, pairs, which pairs are moving higher, which pairs are moving lower. The array is more of a momentum indicator, which is the strongest moves in terms of trend, where they're reaching overbought and oversold, and the currency heat map, which actually pulls the whole lot together and looks across as you can see here, the multiple time frames, all the little cells that you see here, what's moving up, what's moving down, but it's a global view of what is happening to the 28 pairs. Right, so that's the currency dashboard. all the other indicators, but the first thing is the best way to see them is to actually look at the charts. And while I look at my charts, I'll pass you over to David. Now, we do call this session the Ninja Forex session, but for various reasons, my Ninja Trader 7 has been causing me all sorts of problems. So I'm actually going to be on MT5, and David has got Ninja Trader 8. But for next time, I'll have my Ninja Trader 8 up as well.
Thanks, darling, and a very warm welcome to you wherever you are in the world. I hope it's a bit warm than it is here. It was a lovely, glorious May morning this morning in Hampshire, but it's clouded over now, but it's a bit chilly as well, so not very pleasant at the moment. A very warm welcome to you if this is your first time coming along to one of these sessions. Sorry, Dan? Oh, can you not? I've got my microphone on. No? Can't hear me at all?
No, I can't hear you.
Oh.
Could you hear me?
Yes, fine.
Okay, hold on.
Sorry, just have...
I can hear you now.
Oh, you can. Right, okay. I think Anna had a problem with her headset. Hopefully you can all hear me loud and clear. I just want to say a very warm welcome to you wherever you are in the world. And if this is your first time coming along, great to have you here. I know we've got some regulars with us as well, so that's great. Welcome to you too. If you have any questions on the session, just drop them in the chat box. We're happy to answer them there if they're short questions, and if they're longer ones, we will answer them on air for you. We had a great session this morning on the London Forex Open, looking at the British pound, well in ahead of the release and the statement from Carney, who I think is still talking, or is he finished now?
No, I think
he's pretty much finished now for the day, done and dusted. No great surprises in terms of the release itself, but as always, it was a great deal of volatility around that particular release and the announcement and what he was or wasn't saying. And of course, we had the Fed last night as well, which was even more interesting. So I'll let Anna fill you in on that. I'll pass back to her and we will get going.
In fact, I just want to go back to the FOMC yesterday because it was very interesting for all sorts of reasons, and it's one of those events that can cause all sorts of volatility. This is actually the 30-minute chart for the dollar index on my platform, MT5 platform. This particular broker offers, it's a version of the Dixie indicator. We've actually developed some versions ourselves in the quantum set of tools, because not all brokers offer this, but I just happened with XM, I get a chart. It's a version of the Dixie, and the values are the same as well. Because I just want to move to the daily chart first before we go back to the 30-minute chart, and we look at it from. Let me just take one of the indicators off here. Just take off the Camarilla for a second, because this really highlights the importance of not only understanding the technical picture, but with Forex, you have to take the technical picture, you have to read the technical picture in conjunction with what is likely to be happening on the fundamental side, the political side. We have here, obviously, with Brexit here in the UK, and also what may or may not be happening in related markets. Now, this is yesterday's candle. This is the result of the Federal Reserve, which I have to say, you say, well, it went down and then it kind of, why did it shoot back up again? Because actually what Powell said, he didn't actually say anything of any great significance, but it's this understanding, it's this appreciation of what the market expectation, what are other traders, what by the market I mean other traders, what is their expectation? And if we look at it from a technical perspective, ignore this candle at the moment, and we look back to the Dixie, and we look at the volume profile. Now, this week we also have to bear in mind, not so much here in this session, because we've got Europe, UK, and the US. But yesterday, most of Europe was closed because of May Day. China was closed because of May Day. And actually this week as well, although it doesn't affect us directly now at this moment in time, the Forex exchanges are closed in Japan because it's their Golden Week celebrations, and I think there's a new emperor, etc., etc. But let's just look at it from a technical perspective and from VPA. So if you look at a chart, and this is where I find I take issue with, not take issue, but I find traders who say, oh no, everything's in the chart, everything's priced in the chart. You know, you just look at the chart, you know, put your lines on, put this on, and away you go. And I think that's a very short-sighted view, because if you look at the chart and you look at this set of candles, this little group of candles that you have here, this is the daily chart. You had the rise up in the index, then you hit resistance in, well, it actually did get to 98. You have like a doji, you have a reasonable amount of volume, you have another down candle, volume not quite as high as this one, but it's in keeping. Then you have a nice big down candle, rising volume, falling prices. From a technical perspective, is there any reason to support that this price isn't going to go further? Now, yesterday, you have to remember, this candle at some point was all the way down here. And it was, you know, and without the FOMC coming in, and that event, that would have closed as a nice big down candle, and that would have been a red volume bar as well. So from a technical perspective, you think, oh great, yeah, this is a daily chart, but you can apply this this approach works on any time frame. Then you have the FOMC come in. Market expectation in these two candles was for a very dovish Fed, in the sense that the expectation was he was going to say something about there's no inflation. Okay, the economy, it seems to be doing well in the sense from the labor perspective. But all the other signs is that it's not looking fantastic from the other metrics that they use. And when things are like that, the Fed is expected to come in, you know, pump more money into the economy and basically support it along. The metrics that they use, there's a lot of data out there which gives kind of some conflicting, information, if you like. But the market expectation, looking at the technical picture, is that the Fed would be more accommodating, be very dovish. And when we look at the Fed, and this is quite an interesting, this is what you also have to understand, is when you look at the makeup of the current Federal Reserve, and it's always useful to know, because when these characters come onto the media and they start to speak, first of all, you have to know where they sit in terms of what they call the dove to hawk scale, which you can see here. And you also have to understand who gets to vote or not. So if you get someone speaking but doesn't have a vote, so it's not going to have a lot of influence on any meeting, the market tends to kind of discount what they say. But if you get one of these characters, say you have Calls here, who is on the hawkish side of the scale, and he says something which is clearly not in keeping with what the market expects him to say, then the market is going to react quite strongly. But what's interesting about the Fed is if you look down the middle, they're all very much in the middle. They are all, I wouldn't say they're fence sitting, but they're what is known as centrists. So, okay, you could argue that they are very pragmatic. They don't have a very strong view one way or another. In other words, they will react according to what the data tells them to do. I mean, if all these characters were over here, then, you know, things would be, in terms of their interest rates, they would be shooting up. They'd be, you know, they wouldn't think twice about rising interest rates. They really wouldn't care too much about what the stock market thinks. They would do what is necessary in terms of monetary policy to get inflation under control. And similarly, if they're all over here on the dove side, again, it's all to do with their belief system and how they would react to the data that they, you know, that crosses their desks on a daily basis. But when you get a Fed that looks like this in the center, the market perception is, yes, they will react accordingly, but they're perceived more as dovish, David, aren't they? The expectation is, yes, they're centrist. So what happened was it did fall, and then, you know, there was something in the statement which basically said, he didn't give enough of a clue to say that they would be cutting interest rates later down, further downstream, because there isn't any, they need more stimulus, and that's what caused the dollar then to become, if you like, more hawkish, as it were, and it rose. David, is there anything you want to say on that score? No. And we've had a sort of similar. Let me just dock this over here. Just move that over there. As one of the features of MT5 is you can you have these profiles, but what you can do with individual charts, if you just hit what's called the docking function, it allows you to move the chart onto another screen. And I've got lots of charts on ours. It saves cluttering up. And we've had a little bit of the similar reaction to the British pound today. What we have here is what I call a manual matrix. So I've got the British pound pairs that we look at and that we consider, and this is what we looked at this morning. And in fact, what it does, it helps to pick out where the buying and selling is for the British pound and where it is strongest. So if you were looking for a trading opportunity, this is what if you didn't have a particular pair that you like to trade, this is what you would be how you could possibly set it up. I've got it set it up as a 30-minute chart because the 30-minute chart is what I use as a sort of benchmark chart. I use the 3-minute, the 6-minute, and the 30-minute chart. And we can see here, this is the moves that we saw this morning in the British pound. We have some nice rising volume. We have rising prices. We had a volatility candle as well. That was at 8 o'clock, wasn't it, David, when the open at the Forex open. And what we looked at, I was on the pound Swiss, David was actually on the pound Canadian. We had a very similar price action on the two pairs. But what is interesting is for the London Open, it wasn't cable that was delivering any of a potential trade. And one of the reasons, there were a number of reasons for cable, two reasons, which I've put up on Facebook. First of all, the price action was still within this volatility candle. Volatility candles they give you so much information. When they are triggered on a chart, they triggered in all time frames and they trigger in real time, what it's telling you is a number of things will happen. You will either get a reversal or you will get a congestion within the spread of this candle. When they go into this congestion, what you then have to wait is for the break below either the bottom of the candle or the top of the candle. Secondly, so first of all, it's still, this morning it was still trading within the range of this volatility candle. So the effect of that volatility still hadn't worked its way through. Plus the fact this is Asia, and I've told you what's happening in Asia, so there wasn't much going on anyway. Secondly, there was a huge option expiry as well, which is just, has it come off now? No, it's 3 o'clock this afternoon. Is it 3 o'clock? Yeah, a couple of hours to go. Yeah. Now again, that was also kind of helping to contain the price action, and there wasn't much action in the US dollar either. I don't know what this volatility has now done to the option expiry, because we never know what the contract terms are. Is it a touch, a double touch of the levels of the contract? But anyway, suffice to say, someone has, one side has, it's all or nothing. So one side has lost $1 billion and the other side has gained $1 billion. That's the value of the option that we were talking about this morning. We also have the volume point of control here, which is also telling us that we are in a congestion phase on this time frame. This is volume, price, and time. So if you were looking for, if you were a cable trader, what this chart is telling you, and you are only a cable trader, you say, well, it's going to be a bit tricky, trying to pick your way through the congestion that we had, certainly from here. There was a little bit of movement because there was very heavy buying of British pound this morning, but it wasn't as heavy as the actual trades that we looked at. One of them was against the Canadian, and the other one was, as I said, against the pound Swiss. And how do we know that, other than doing all this analysis manually? And this is where, to go back to the currency dashboard that we've developed, and I put them up here in 3 different time frames. I'll just move them over for you, where we've actually put 2 indicators on one chart. One is the currency strength indicator and the other is the currency matrix, because what this does, it does the work for you. It tells you these 2 indicators together give you so much information and really save time on analysis for pairs that you like to trade, highlights potential trades. Like this morning, we were waiting for a reversal, certainly on the 30-minute chart, for a trade to the opposite side, because there was very heavy buying. Let me just spring that up and you can see it here. Let me take the docking out, otherwise I won't be able to change time frames. Where is it? Just back over. I'm sorry, it's a little bit tedious working this way, but it's the only way I can really show you what I mean by this. Right, this morning, let me just take all these off as well, because we're not really interested in these. Oh, come on. That's it. That's it. Okay. Bring that down a little bit. Okay. What we were waiting for this morning, we were waiting for a reversal, both overextended. This was the pound, this was the Swiss franc. The Swiss franc still had a little bit of way to go down, and it took time. If we look at the chart on the 30-minute, this is the area that we're looking at on the CSI. We saw the rise, the strong rise in the pound, reasonable amount of volume underneath it. Then we had the 2-bar reversal, which coincided with the reversals that we saw on the CSI, and we did have a pullback. We did have a reversal. Did it carry on? We had a little pullback here, not a lot of volume under those up candles, and it carried on lower. Now, from a technical perspective, that could have carried on very nicely. It would have carried on, maybe, continued on its own sweet way. But we had another event, which, we had to be aware of. And so all bets are off, as it were. And we now have to wait for the reaction to that event, which is the BOE, to calm down again. And this is what you have to face when you make these trading decisions. What I'm trying to say is you might see a fantastic technical setup on your chart. This is the 30-minute chart. You want to go ahead and place a trade, but because there is an event such as a central bank, there's a piece of fundamental news, and suddenly that has to be factored in to your technical analysis. It may be that the original trend will carry on lower, and this is what we're waiting for here. Where is this going to go? Well, we've got the volume point of control back here at 32.80. Well, certainly that is a reasonable objective for the price. And with regard to the shorter time frames, I'm just going back to dock that. So we'll cut it down. Let's have a look. Let's have a look. The 3-minute chart here and the 6-minute over here. It is a bit tedious with webinars, but there's no other way of moving these charts around. And what we can see here, while all this volatility has been going on the faster time frames for the British pound, in the background, let's put that back there. What have we got here? Well, if we look at the euro, we can see the euro has been bought. And again, we do exactly the same analysis. Well, what's it being bought against? What's the strongest one? Well, we look at the blue, which is the Australian dollar, and we've got it rising there, falling there. And what have we got on the 30 on our benchmark chart? And we can actually see we've actually got a cross. I'm going to take that off. We've actually got a cross now on the euro going up and the Aussie coming down. So if pound is just too volatile, there's too much going on with the British pound, there's always something else going on. But by having these 2 indicators together, at least you can pick them out. You can pick out the potential trades going on in the background so that you can maybe see what's going on and pick up a potential trade. Let me just do that for a second. Then what we do here, is we look at the euro. Let's move away from the pound because it is still very volatile. It's going up and down, you know, and it's just whipsawing around. So let's look at the euro. So markets focused on pound at the moment, and in the background, what's been happening with the euro? Well, the euro pound is here, obviously. Maybe you want to stay away from that, but look at the euro Aussie. The euro Aussie is up here. It's moving higher on the 3-minute, and it's certainly going to be moving higher on the 30-minute. And personally speaking, to avoid all the volatility, waiting for the pound volatility to calm down, the euro would be one. Euro Aussie would be certainly one that I'd be looking at. Is that, would you say that, agree with that, David, as well? Is that one you've got? Yep, sorry, I've been gone on, rapided on a bit. I'm just going to turn myself off now. And do you want to say anything, add anything to that, or move over to you? Okay, fine.
Just to add my 2 penneth worth to that, and this may be self-evident to you, but I think it's worth saying that we all use a multiple time frame approach for charts, but equally the same principles apply to the indicators themselves. And the matrix is just one of those with the CSI that just gives you all that information across the time horizons. What's also interesting about the matrix, and when you look at those pairs that are, let's say, mid-table, in fact, if you isolate, I think, did you have the euro isolated out? Sorry, don't. Sorry, apologies.
Which time frame?
Just on all three again, sorry. Okay, there we go. Not only does it give you a view of which pairs are presenting the best opportunities, in other words, which ones are trending most strongly, because that will be reflected in the ranking ladder where they sit in terms of either at the extremes or in the mid-table. But in addition to that, on what the matrix also reveals, it reveals this aspect of universal sentiment. In other words, is the market universally buying euro, or is that euro sentiment that you're trading, maybe you're on a euro New Zealand or a euro Aussie, is that sentiment particular to that currency pair and therefore not reflected across the broad center, the broad matrix for that particular currency? In other words, what you want to see trading a particular currency and therefore its currency pair is that the sentiment towards the currency you're trading, in other words, the euro in this case, is universal. And if it's universal, then all the pairs should be ranking pretty high, or if they're inverse, very low, reflecting that fact. Now, if you've got maybe one or two which are standing out and perhaps sitting in mid-table, then what that's telling you is that whilst you may be trading sentiment positively for the euro in that pair, the market per se, broadly, is not buying euro across the market. And it all comes down to risk, because if you're trading, let's say, euro dollar, and for whatever reason that particular currency pair is moving very strongly, but when you look at it on the matrix, the buying and selling of euro and dollar is not reflected across the matrix, then you're trading something which is not with the universal flow. In other words, if you think of it in terms of a river, if everyone is buying euro, then the river is flowing in one direction. But if you're paddling your canoe in the opposite direction, you're trading against the broad market sentiment. Nothing wrong with that. It just means that the risk on that trade is so much higher because you're not trading with the universal flow across the market, if that makes sense. The other thing that the matrix also reveals is when you see those currency pairs mid-table, for example, if you look at the 3-minute one on the left there, you can see there's several currencies which are just oscillating around in the middle. One of them is the pound, the yellow line. You've got the dollar there, the red line. You've got the Canadian at the moment there, which is the purple, and you've got the yen, which is the magenta. So when you start to look at those currency pairs, they are not trending because they're just in congestion. So if you look, for example, right now at the, let's say, the pound yen or the pound CAD, they wouldn't be going anywhere particularly because there isn't strong sentiment to both sides of the currency equation driving the pair. You haven't got strong buying on one side and strong selling on the other. So you expect to see those pairs mid-table in the ranking ladder because they haven't got a strong trend. Once they start to develop a strong trend, they will start to move up or down the ladder accordingly because they're being driven by both sides of the trading currency pairs on either side. So I just wanted to make the point. The matrix, like the currency strength indicator, is always the starting point, because that is these are the building blocks of the Forex world. They're the individual components which go to make up this world. Then you step over to the currency matrix, where you're moving from individual currencies to looking at currency pairs and their relationships in terms of across the matrix. And from there you go to the array, and then we'll come on to the heat map later on. So I just wanted to make the point. It tells you so much about what is going on in terms of that particular currency matrix for that particular currency, and whether the sentiment is universal and which pairs are offering the best opportunities and where the strength of trend is. You can see there the euro pound, euro dollar, euro CAD still up at the top there. The euro Aussie, funnily enough, is not the most strong. It's the euro pound, but then you move down to the 6 minute. The euro Aussie is the strongest there, and over onto the 30 minute, you've got the Aussie, the pound, New Zealand dollar there, all ranking up at the top. I'm just going to pass back to Anna for a moment.
And also take a note of the values here. They are pretty much in terms of strength, if you like, strength of euro. There's very little difference between the values. Occasionally you get when it's a very strong momentum move. So that euro New Zealand, sometimes that could be double figures. So that was, say, 15, and the second one was only, I don't know, 9 or something like that. That would also tell you that there is a very strong, clearly much stronger move. But the difference in these three, it's really, it's kind of, I wouldn't say negligible, but almost negligible. Now the question is, what we're looking at here, we're looking at a revert. Clearly there's a pullback on the euro Aussie. I'm not even going to look at a chart, because I know what's happening on the chart at the moment, because the indicator is telling me that the euro is very overextended. The Aussie is still, looks like it's still falling. These numbers here, 80 and 20, they don't really have any meaning per se. They're simply a frame, a reference, if you like, so that if it's at 80, you know that is pretty overextended, but it can go well beyond there and it can stay there. What you also have to be aware of is that one currency may turn over, but the other, the counterpart, may actually be carry on lower and driving that particular pair in the direction. So although the euro has turned over, as we can see here, there's some selling coming into the euro. At the moment, that selling is probably not as strong in the Aussie, because the Aussie is still being driven lower. So if you like, the divergence, the force of divergence is still carrying on. Now, with our benchmark chart, as I said earlier, you've got this cross, so you've still got a rise on the euro, and the Aussie looks, it still wants to fall. So as a trader on a short-term chart, where, how's this going to help you with perhaps an entry? Because and also, is the reversal, the correction that we see on the faster time frame, is the correction per se, is that going to deliver a tradable opportunity? And there's no straight answer to that. Sometimes it does, and sometimes it doesn't. When it doesn't, and in fact the trend in the slower time frame is going to carry on. Let's take the euro Aussie as this one, because the euro Aussie is way up here. It's still at number 2, and it doesn't show any signs of moving, unlike the other euro pairs. The way you then objectively look at the opportunity to join in that move, which is clearly going on in the 30-minute chart, and this is where you could use the volume price analysis, because what happens is the primary trend on the 30-minute chart is clearly for the euro Aussie in an upwards direction. Euro is being bought, Aussie is being sold. Now, that primary trend doesn't go up in a straight line. You have pullbacks and corrections. What you have to then judge is whether those pullbacks and directions is there validity to them. First of all, if you're going to take a reversal on a faster time frame, you may, but depending on what VPA tells you and the candles, that will also give you two bits of information. First of all, whether there is a trading opportunity, but it is possibly going to be higher risk because you're going against the sentiment in the slower time frame. But if you've not entered and you think, do you know what, I really want a bit of this action, then knowing that the secondary trend, the micro trend, which, if you like, develops as a result of the correction or the pullback against the primary trend, you could say, do you know what, I know this is just a secondary and micro trend. This ain't going to go. This is not a full-blown reversal. This has got some more legs, if you like, and that is when you can possibly take it as an opportunity to join, as I said, the trend on the primary trend higher. Because this market, these prices, they are on a continuum. You know, there isn't. At what point do they begin? At what point do they don't? They just carry on. They just oscillate from overbought to oversold and back again. And what we have to do is pick out those oscillations on the different time frames. Stick to 3 time frames. Don't, you know, and if you get it wrong, we've done it in the past, is, well, I was wrong in my time frame, but I can see on the daily chart, you know, that it is actually going to go in my direction. As I said, I have deliberately not looked at the candles and the charts because I really wanted to highlight what these indicators can do for you just on their own. And as David said, just to reiterate, when they are moving in the same, when the lines are certainly moving in the same direction, there is no divergence, there is no clear divergence, then there is congestion. And one of the questions I've been asked is to explain, how do you identify different congestion from accumulation, distribution, and whether it's accumulation, distribution, or whether it's just what we call fair value, and this is where we bring the volume point of control. But I'm not going to cover that now. I just want to stay on this. Can I pass over to you? What are you going to be looking at? The euro, or are you going to look at something else?
Actually, just want to stay there for a minute.
Sure, no problems.
We'll hop over into NinjaTrader in a moment, but just to highlight something else, because it's easier on this side than on my side. If you just look at the CSI at the bottom there, what's going on right now, and I've actually pulled up the Aussie Swiss, you can certainly do the same on your platforms. But if you look at the Aussie Swiss now, it's a nice example of, first of all, the different time frames, because we've got the 3 minute, the 6 minute, and right the way out to the 30 minute. So it really does highlight one issue. As you can see on the left there, the Aussie Swiss, the Aussie is very heavily oversold. The Swiss franc has got a little way to go on 3 minute before it gets up into overbought. In terms of the 6 minute, double the time frame, the Aussie has got a little way further to go before it gets into the what can be considered oversold, as indeed has the Swiss franc. But over on the 30-minute time frame, you can see that we haven't even crossed yet. We've got some decent Swiss franc buying, and we've got some decent Aussie dollar selling. What will happen, what may happen, is this, and this is where it comes down to your approach to trading and the time frames, which generally the analogy I use is of a blinkered horse, because the reason horses are blinkered is they have to focus. They're not very good. They don't race well if they're looking to the sides all the time or worrying about what's coming up alongside them. So they're blinkered and they focus on the finish line. And in a way, that's what you have to do. As Anna said, once you start moving away from your chosen perspective, then it's very easy to do that. We've all done it. It's very easy to do. You look up and down the various time frames. You think, oh, well, actually, do you know what? It's not quite going the way I thought it would. But if I look over here, I think I might be okay. It's very easy to do, so we all do it. The point I'm making is this: if you're looking at a 3 minute, this as a scalping opportunity, there is still some room left in there. But at some point, that 3 minute time horizon, what will happen is the Aussie will start to reverse, it'll rise, and the Swiss franc will start to reverse and it will begin to fall. Now that may possibly happen on 6 as well. And dependent on whether that is a true change in longer term trend or not, will dictate whether it ultimately appears in the 30 minute. Now, from a 30 minute perspective, someone getting into a trade there, selling the Aussie, is probably not going to be too bothered if they see it going on in terms of a 3 minute and a 6 minute, because it's what they will see as a 30 minute trader or an hourly trader. What they will see is merely a pullback in what they consider to be their longer term trend. So they are going to be sitting in that trade on a 30-minute time frame. They're almost certainly going to be looking at the hourly chart. So what they see in terms of a minor reversal, which is what a scalping trader on a 3-minute time frame will see as a great opportunity to get into a trade, what the slower term trader will see is merely what they expect to see in every trade they've ever seen in their lives, which is a trend develops, it pauses, you get a minor reversal, and then it continues on. And that's the issue we all have to deal with. So it's a question of focusing on your time horizon and trying to limit yourself to what it is you're doing. Are you scalping this market? Are you on a 3, 6, 10 combination, or on MT4? Are you on 1, 5, 15, whatever it may be, but you're basically scalping the market? Or are you taking this as a longer term position? I use inverted commas loosely, 30-minute, an hourly, maybe you're out to the 4-hour even. And in that context, you expect to see market pullbacks and market reversals. They're part and parcel of life. That's a given. But what you see on the 3-minute and what you'll see on the 6-minute are opportunities for other traders. Whether they cause you any concern, that is down to analysis of the chart. But the point is that whatever time frame you look at, you will almost certainly see something which gives you a contradictory signal to the one that you are trading. You're long, another trader's short in a different time frame. Both traders make money because they're trading different time horizons. That's what it comes down to, and that's not just specific to Forex, that's all trading in general. So I just wanted to make the point. It is an example. You can see it there on the 30. You know, the euro, the Swiss franc and the Aussie dollar coming up for a cross. If you were going to trade that, there's a longer term, there's plenty of fat left in that particular trend. But on the 3-minute, it's coming up to a pause point because the Swiss franc's coming up to overbought and the Aussie's down in oversold. So the chances are you're going to see either some congestion at that level, in other words, they're going to move sideways, or they're going to reverse off those points and continue out, because this is a market of mean reversion. These currencies move constantly from oversold to overbought and back again in all time frames. Just going to pass back to Anna for a moment.
I'm going to pass over to you. I'm going to change. That's okay. I've turned myself on. I'm going to change, and we're going to have a look at the Ninja. The advantage of Ninja is we actually have second charts as well. So if you're really fast, and in fact, we use the second charts when we look at the indices in the third webinar that we're going to be holding today, particularly if with the indices, if they are in a very tight range and it's really hard to sort of pick out some trades. As an index trader, we trade the YM. That's one of our preferred instruments. And you know, if it's not behaving itself, but if it's just in a tight range, which it has been doing, so particularly when it's moving up, and it tends to move up, you know, in sort of quite small steps, as it were. Sometimes going to the second chart, you can still pick out these trades, and there are recordings on the YouTube channels, both the Quantum one and my own one, where David has got his Ninja 8 up with the second charts, and you can see the trades. And you know, at £5, is it $5 a point for the YM of all the indices? If index trading is something that perhaps appeals to you, and you can certainly do it on the MT4, MT5 platform, because most brokers offer a version of the futures contract. Ours is actually the actual futures contract. The YM is the E-mini for the Dow Jones, and as I said, at $5 a point, you know, it's, and all you're looking at is one instrument. The other issue with, not an issue, but the thing you have to bear in mind with Forex all the time is you obviously you're trading one currency against another, and it is, I think, much more difficult than looking at a single instrument and a single market. Right, let me pass over to David, because he's got his charts up, and I'm actually going to put up my Euro Aussie profile, so we'll see what's been happening on those time charts, and if we've got time, we'll go back and look at it. Very quickly, I just want to mention this because I forgot this morning. If you've got the full package, the Quantum indicators. The latest indicator that will be added to your package for free, because if you buy the package, that's what we do whenever we develop new ones, they're automatically added, and that is there is a new pound index. Is the Ninja one now ready, David, or almost ready? Yeah, and if you've got Ninja package, then it'll be added. It's already available. It appears in the navigator on the platform. If I just move it to show you, I know people say, well, where do we find this indicator? And it just appears on the navigator. There we are. Let's just move those over. These are my docked ones. So if you go into navigator here, there we are. These are all the indicators that come as part and parcel of the complete package, but you can buy them individually. And the latest one is the pound index. Right, let's move over to David because he's got some charts to look at. And as I said, and I will go and scope out the Euro Aussie because the pound is, as I said, it's still whipsawing around. Okay, all yours.
Thanks, darling. And I've got multiple time frames here, as you would expect. I haven't got the seconds chart running, but I will have that running later for the index trading session. But I've got this running on 3-minute top left, 5-minute middle, 15-minute over here, 30-minute down the bottom left. This is on Renko and over here on the daily. This is the Aussie Swiss, which I mentioned had this nice move lower. For those of you who come along regularly, you'll know I have a bias to the short side, so I'm always hunting out short trades. It's part of what I have to live with as a trader, but there we are. I'm well aware of it. And the reason for that is very simple, because generally speaking, markets move much more quickly to the downside than they do to the upside. So when it's falling fast. Not always, but generally, as a rule of thumb. It's a bias that I have to live with. And as long as you're aware of it, that's the most important thing. As I say, this is the Aussie Swiss, and it's no surprise to, as I highlighted on Alan's MT5, you start to see this sort of price action. You're starting to see minor reversals. This is the primary trend, the bearish trend, but you're starting to see minor pullbacks against that particular trend. No great surprise given the status of the CSI, because on the CSI, the Aussie and the Swiss were getting up, certainly on that time frame at any rate, we're getting up into overbought and oversold territory. So it's not a surprise when you're using the indicators to see this sort of price action start to develop. And the problem, as always for traders, is holding and maximizing the trend. And what it comes down to is, and I'm going to pull up the pound CAD from this morning because that was interesting as well. It's basically maximizing the opportunity that you get. If you're comfortable trading reversals, if you're always looking at the extremes of the currency strength indicator, for example, you're looking at those overbought, oversold regions to get into a trend early, then you're going to maximize what's available. But that comes at a price, because the price is you have to lay out more risk on the table, financial risk, if you will, because you have to accommodate. We went right back over here, for example, this is 1040, but wherever you get into a reversal position, let's just go to the CSI for a moment. It probably makes it easier. There we go. There we are. We're on the 5-minute here. Just click this lot back on again. I had the dollar isolated out. I'll go to the dollar CAD in a minute as well, because that's quite an interesting chart. But in terms of reversals, you might now be looking at this, as I said earlier, as a scalping trader, your eye might be drawn to the bottom here where you've got the Aussie, you've got the New Zealand, and up at the top, you've got the Swiss franc. The Japanese yen is starting to move. We've got some initial buying coming in there, so probably not great news in terms of sentiment for indices. And we've got the dollar buying here. So if you're looking at the reversal opportunities available, you're looking at the extremes. That means that you have the potential to get into that trade early, which is great. It means you can maximize the potential, but it comes at a price because you have to set the stop loss wider. If you're going to jump onto an existing trend, which we've got going on, then your stop loss can be set that much closer. It's that simple, and it's a choice that only you can make. The other aspect that we actually cover in detail in terms of the program, the education program itself, is really understanding, first of all, what is a primary trend and what is a secondary trend, and how to identify whether that secondary trend is indeed just that, or whether it's actually a full-blown reversal from primary to primary. In other words, from bullish to bearish or bearish to bullish. And we cover all that in detail because it's so important. Now, what the trend monitor does actually helps you in that scenario, because the reason we developed that indicator was to try to give you and all of us help in holding a position once you have some profit in the market, because what generally happens is as you get a reversal against you, you close out, and what then happens in terms of financial progress in your trading account is it flatlines, or it just moves very slowly, because you're not negating all those small losses with big winners. The big winners have to come in, otherwise you're just trading a lot of small losses and maybe some very small profitable ones as well. So you have to really maximize those winners as best you can to hold the trend. And that's what the trend monitor does. It doesn't change very quickly, because what it's doing is it's taking a much more considered view of the trend to try and help to keep you in through all these periods of congestion, these little pullbacks, whatever they may be. We've got a 2-bar reversal here. If you overlay that one on that one, it basically the price action has gone up and come down again. So if this was a 6-minute time frame, that's what you would see. You'd see one of those. These are great candles. When you see them in a trend lower under good volume, if you've got good volume associated with them, they are classic signals. They're re-entry signals, if you will. If you weren't in this bit, but you need to get in, or you want to get into this trade, you're getting in perhaps a little bit later, you've let this lot go already, but you want to get into this trade for whatever reason, you see it as further opportunity to the downside. These sorts of price action where you see the price trying to rally, it falls back, you've got good volume under it, it's giving you a signal that this is a weak market. There's weakness here. It doesn't look like it's going to carry on. It's not going to be a reversal. It's just simply weakness ahead, further weakness, more selling coming into the market. Market's trying to rally, and the sellers have hit it back again, and on we go, down we go again. And the trend monitor really just reflects that, keeps you in through that. That's on the 3-minute. Just move that out of the way. This is on the 5-minute. Pretty much the same thing. There you can see that. This is the sort of price action. We've had the effort to rally. We've got a wick to the upper body, got decent volume under it. Remember that we can compare volume here, and you've got a similar one here. Effort to rise, not back, ton of volume under it. That is not a sign of strength. It's a sign of weakness. It's just a weak market. It doesn't mean the market is just going to do that for you off one candle. But what it is telling you loud and clear is this currency pair on this time horizon is weak at the moment, because high volume, if that were not an anomaly, in other words, if price and volume were in agreement, then on this candle, the price action should have closed up here somewhere, nice widespread candle, probably tiny wicks at the top and bottom. It hasn't. It's tried to rally. So what does that tell you? It tells you the bulk of that volume in there is heavy selling volume, and therefore you expect further weakness to come, which it does. Now we've broken away very firmly from the volume point of control. We're continuing on lower. Just move that one out the way. Then we're up onto 15. What have we got on 15? The trend monitor here is bright red, which is what you expect to see. There's no flicker of change there. This transitioned some time ago on 15. What's interesting about this, it doesn't always happen like this, but this is the classic traffic light system, if you will, the classical transitional change in color. We go from bright blue to dark blue into dark red and out the other side into bright red. In other words, we've gone through the full sequence, and the opposite going the other way. Doesn't always happen like that. Sometimes you can go straight from bright blue to bright red. Sometimes it may miss one of these and go straight through. Might go to dark blue and then straight into dark red. There's no rule book that says it has to follow that transitional sequence, but in this case it has, and we're through the other side. We've got the volume is rising. It's compressed by the fact that we've got a ton of volume over here, which from last night's Fed. If you want to get rid of that and give you a better perspective, all you do is just drag the chart across. Now you can start to see we've got classic price action. We've got falling market and rising volume, which is what we want to see, because that confirms the weakness. Remember, in a rising market, you want to see rising volume. That confirms strength. In a falling market, you want to see rising volume. That confirms strength as well. Weakness rather to the downside, because volume in the up move, we all understand intuitively that it takes effort to get things off the ground, but equally in from a trading perspective, it takes effort for the market to sell off as well. So in a selling market, in a heavy selling market, if it's moving fast, we want to see rising volume as well. That just confirms the weakness in the market. Then you're back into all the other analysis. You're looking at support and resistance. We've got the volume point of control down here. Just move the chat out of the way. We've got the volume point of control down here. So, you know, it's heading that way. We've got a ton of volume in here, so it's got to battle its way through this lot. We've also got some potential price support levels here. We've got one here. This is based purely on price. This has been tested 3 times. It's reasonably strong, but it's not that strong. This is a little bit stronger. This has been tested 5 times. So we've got some decent support here, potentially from a price perspective. But as we get down into these levels here for this particular currency pair, we've gone through this low volume node very quickly, which is what you expect. If there's light volume in a region, then you expect price to move through there pretty swiftly, which is what it's done. If we've got high volume, which we have all around this area now, we're not expecting this pair to move very quickly. And the probability is that it will move, if it does get through this price support platform here, potential support platform here, on down to that one. The chances are we're then going to see congestion around this region here because we've got the heaviest volume and we've also got the volume point of control sitting there as well. But for the time being, it's pretty bearish, that particular pair. We go down onto the slowest time frame, down onto 30, pretty much the same. It's just reflecting the fact, and again, we've got the volume point of control. And you can see here on the trend monitor, this hasn't transitioned yet. We're on bullish. We're starting to show that change in sentiment. That really is how the ripple effect from, and the analogy I always use is of a pebble in the pond. You drop a pebble in the pond and the ripples move away. And if this is a strong change in trend, then it's going to come through from the fastest chart, through into this one, through across into that one, ultimately down to here, and of course, ultimately down onto the daily, which is already reflecting that bearish sentiment anyway over here for that particular pair. Let's just head back to the CSIs and see what's going on there. And then I'll flip over onto the other pair from this morning, which was the pound CAD. Let's have a look at 15. Let's go back to 5. Okay, Swiss franc is still here. We've got the Aussie, it's still falling. Very heavily oversold now. This is just getting up into overbought. We got far to go on 15. Still some way to go there. And the further out you go, the more travel there will be for those particular currencies. Just go back to the one I was looking at earlier on. Oh, sorry, beg pardon, wrong one. Let's go there. Right, this was from this morning. Come back to this in a moment. This is falling nicely, lovely. Red is my favorite color. You'd be surprised to learn. It's not really, but I do on a chart, it says. What were we in this morning? Pound CAD, wasn't it? That was the one. Just load that up here and I'll show you the move we were following in live in the session. You can watch it on the video because it's already gone up on Anna's YouTube channel. This was 8 o'clock, the London Open. We saw this really nice trend develop and we were able to follow that through for something like 30 or 40 minutes. It was a really nice trend. But what was interesting about it was that at the time, and again, it's on the video, we had volatility. This was on the 30-minute. We had volatility coming in and I said, look, you know, when these volatility signals arrive, you've got a decision to make. Are you going to stay in? Are you going to sit through a potential congestion phase, which may continue on in the direction of the trend, but ultimately may reverse against you? Or are you going to do nothing? And I have to say personally, when I've got an open position and volatility comes in, and it's triggered in real time, so the indicator itself appears in real time. In other words, you don't have to wait for the candle to close. As soon as the price action has moved outside the average true range, bang, that's it. It's triggered, it's fired, it's there. So you don't have to wait for the candle to complete whatever the time frame. Once that condition is met, it appears. So you know for a fact you've got volatility. What is the importance of volatility? You've got market maker participation. You've got the opportunities for congestion and reversal because that's where they play. Because if you were a market maker, that's what you would do. It's so simple. It works on the emotion of the fear of missing out because when, and I'm sure you've seen it, when you see a market that's very fast moving, your natural reaction as a trader is to jump in, because you think it's easy to make money when the market's moving fast. And actually, it's the complete reverse of that. When the market's moving fast, this is a compression of time. In other words, volatility is nothing more than price action being compressed into a short space of time. And it's compressed into a short space of time for a reason, because the market makers are there. They're moving the market very quickly. They want you to jump in, because it then gives them the opportunity to trap you into a weak position. So as soon as you see the volatility appearing in the market, the trigger is there. At the worst case, it'll be a reversal, but generally, most cases, it goes into congestion. You've then got the emotional aspect to deal with of sitting through a congestion phase and worrying yourself silly about which way the market is going to go thereafter, and probably you close out anyway because you're too frightened, and it just becomes, the pressure becomes too much. It's all about managing emotion, and the market makers understand that so well, and you've just got to understand this in terms of volatility. So that's what happened on 30, and as a result, in this occasion, we did actually get a full-blown reversal and off down the other side of the hill. So you would have done well to close out, as I suggested, take your money off the table and wait for something easier to come along. That was the pound CAD. The other one I was looking at just while Anna was talking was on the dollar CAD, because there was a nice reversal coming up on that one, which has also delivered quite nicely. This is where we were. This was but this is where we were getting underway around here somewhere. I was looking at this, thought this looks like a nice reversal coming up, and indeed it has. It's delivered really nicely up through the volume point of control, even higher. So we've got some strong buying and strong selling of the Canadian. Now what we've got up here on 3 minute, we've got a long-legged doji candle, ton of volume under it. Doesn't necessarily mean that this is going to reverse. What it does mean is we've got some pretty strong indecision. So you just have to wait and be patient. This signal, the long-legged doji candle with high volume, is not a signal of reversal. It's just simply telling you that there is indecision. This is not a hammer candle. It's not an upthrust candle. It's just telling you we've got indecision for the time being. We've got low volume ahead. We've got very little in the way of price resistance overhead. So all things being equal, if it does carry on to the upside, it should get through that lot pretty quickly, provided the volume is in agreement with price and drives through that particular region quite comfortably. Again, a similar sort of picture, and it's again down to the trend monitor. You can see it's blue here. We had a little bit of a transitional color here on 3, down at the bottom here. So we came out of our very bearish phase. We went to a transitional. Now we're through into bright blue. This lot of price action here created this pause point in the trend monitor, but it never went to dark red and certainly never went back to bright red. Then we come out the other side and we're back off, continuing up in the bullish phase. And those are the regions of price which are so dangerous and so costly, because it's so easy to get closed out. On this occasion, probably wouldn't have made a great deal of difference because we were just coming out of the congestion phase here. So you might not even be in this trade at the moment. But had this been halfway up, say this has occurred up here somewhere, and you've got this going on, and you're thinking, oh gosh, I had this nice rally, and now it's pulling back against me. What do I do? Blah, blah, blah. And that's when the emotion really kicks in, and that's when you close out, and then you're left with trader regret, because you're seeing the trend develop and taking off, and who knows where this could go a lot higher, and you're left sitting there thinking, well, I've taken 10 pips when actually I should have taken 40 or 50. It happens all the time. But again, note what's going on down on the 30-minute. We've got the volatility triggered here. This is a warning sign. This is telling us we've had volatility on the 30. This is not a strong signal that this market is going to carry on higher for the time being. So, if you were looking to get into that trade right now, I would suggest it's probably not the best one to consider, purely because we're now facing the prospect of, at the very least, some congestion developing purely through the prism of that volatility indicator on 30. Just going to pass back to Anna for a moment, if I may.
I think that's it, David.
Okay.
Over an hour.
Okay, we've already done over an hour. Apologies. We do like to carry on, so apologies we've overrun. Let me pass back to Anna, and we will wrap up.
Able to see my screen, and actually I brought up the Euro Aussie, and the one thing I didn't mention when we were speaking, and that is to use something like a Renko chart which is a non-time based chart, and this is the move higher that we are seeing in the Euro Aussie, and we were saying we were waiting for potential reversals. This is the 30-minute chart, and if I bring over the 30-minute for the matrix, it's still pretty much up there. You can see it. The numbers are now actually, they're pulling away. It's quite a strong number that we have there. It's really reflecting what we see on the 30-minute chart, that this pair in this time frame are really, but the driver for it, let me just pull the CSI up a little bit because this is quite important. Just pull up the CSI here. Now what's interesting is you can see the blue line falling really, really sharply. That's the Aussie, and also falling very sharply is the in fact all the commodity dollars are falling, aren't they? You've got the Canadian falling quite strongly. You've also got the Aussie and the New Zealand. There's all three com dollars are being sold off. The euro, at that, when we were looking at it, you had a really nice strong straight sort of diverging lines on both sides, if you so it was like an equal force. The euro is kind of sort of flapping around a bit there, while the Aussie is carrying on, and it makes me think that this is being driven more from the perspective of the sell-off in the Aussie. But in terms of the matrix, that is still pretty much here at the top, and you think, well, you know, we've seen the corrections and the little pullbacks on the faster time frames, but none of them have been sufficient to really, you know, to provide anything. This is the 30-minute chart. We've seen it. We can see here there's a little bit of weakness coming in now, which is not surprising because it's been motoring up quite strongly. What is also telling us as well, that talking about volatility, I've actually got the 4-minute chart up at the moment. This volatility triggers in real time, and that immediately tells you, as David says, that first of all, the price action is outside of the average true range. You will either get, as we see here, the pullback, the reversal back into the spread of the candle. Now, whether that reversal then carries on, only time will tell. We have to wait and see. Or you get congestion within the spread of the volatility candle. And we saw on the cable, the 30-minute volatility, if volatility is triggered on the slower time frames, it can take a lot of time before the ripples, if you like, from the volatility actually play out, as it were, and the price action goes you know, from either the high or the low of this candle. So it's interesting to see that volatility has come in. Now what happens with Renko, when we're talking about little pullbacks, you can actually use the Renko chart as well, because the Renko chart doesn't look at time. It simply looks at the pip value of these particular bricks, and what they are, I can go and have a look. They are going through. They're actually, I've actually got a fixed box size, so I have not using the ATR function. Each one of those is going through once 2 pips go through the market, but you can set it on the ATR. That's very, you know, pretty much up to you how you use that. So that's the value of that brick. And what that is telling you, what you see on the time chart, we've seen the volatility, we've seen the little pullbacks. We had a couple of little pullbacks on here, very squashed candles with reasonable volume. They're actually anomalous because that kind of volume on these 2 down candles, you would expect the candles to be much wider, much bigger than they are. So that is a reverse of, if you think, okay, I can see the down candles, I can see a lot of volume going in, but it's not going down. So what that's telling me, this is not ready to roll over. Then you have this candle here, you have buying under that wick there. Why? Because you've got a lot of volume underneath it. And in fact, once that candle was triggered, it also triggered the pivot. And I think the pivot, yeah. So we know we're going to get a push up from this point as well. And if you use them in conjunction with what we see on the matrix and on the CSI, they all come together to give us some confidence in what we are seeing on the charts. With the 30-minute, we've got a little bit of weakness coming in here. This is the Camarilla, just to give us some kind of hierarchy. Where is this price aiming for? What is it? What is the price objective? Well, the R3, you've got a high here at 159.84. So it is logical to, to expect that the price at least will make an attempt to test that high. And yes, we do look at the context on the daily. What is the daily telling us? We're having a pull away from the volume point of control, this sort of congestion period that we've had for this particular pair with a lot of volume underneath it, both on the up candles and the up candles have been supportive. And if you're going to get a reversal, you need to see, wider spread candles than we have here. So you've got price support, but what you've also got is you've got sense of there's no bias, there's no strong bias for this pair, certainly in this period here before we had the the breakaway from the VPOC, the volume point of control. It's just so this is congestion, where, if you like, you have price agreement. It's sometimes called, in market profile terms, it's called fair value. The market doesn't have a strong bias in one direction or the other. Yes, we have these two relatively high volume bars here under these two candles, but look at the size of the candles. They're really not, they're not really enough to tell us that, yeah, there's some serious selling, there's a serious intent for selling. And in fact, it goes right back to retest the volume point of control. Now we're looking at some rising volume where the candles and volume are kind of in agreement with each other. And we have the different support and resistance levels of where this is likely to go. So from a global perspective for Euro Aussie, it is still looking quite bullish. But because of, as I said, we've got this volatility triggered on the 4 minute. What we know what happens after the volatility is triggered, you do get this retreat to within the spread of the candle. We need to see, is this going to be a potential tradable reversal? So far, what we've got on the Renko, on the two pip Renko, well, it's certainly not showing any strong signs of wanting to move lower. Yes, we've got that. We just have to wait and see, and trade accordingly. So anything else you want to add to that, David, or not? In fact, let me just change the ATR to that, just to see if to give us another picture. What you do when you apply the indicator, which is really very neat. So you go into properties, and that's the fixed box size. Let's go to the ATR. There we are. In fact, I have actually moved to the ATR function rather than fixing the box size myself. What you also have the option here, enable custom chart, we say true, which allows you to add indicators to the indicator, which is why we've got support and resistance on there. And you can add standard, you can add moving averages, you can move what you want to them. So let's upgrade that. And in fact, it's moved it to 3 pips. So let's close that. I'm actually going to start a fresh one. No, let's keep that up. So let's move that. Let's close that down. Let's move that back up. Let's just open a Renko chart. You get that. And then all you do is you apply your template. I've actually got a Renko template here. There we are. And that's what we're seeing at the moment. Because we've got 3 pips as well, you'll find that the price action will slow down slightly, because this is just on value of pips going through the market. It's not time. This is not time. This works very different to the one on the NinjaTrader platform. So let's see that. What is the Renko saying? Well, we've still got blue dots. We've still got blue trend monitor. Yes, we've got a little bit of weakness that's come in on the 30, but the daily is still, looking bullish. This is the move back to within the spread of the volatility candle. We'll just see what happens. So, and on the very quickly on the matrix, it's still up here as the strongest pair in this particular time frame. And in fact, what's interesting, I said I think this was being driven more not so much by the euro buy, but the selling the Aussie. You can see here the weakest pairs in this time frame. They're all Aussie dollar, Aussie yen, and Aussie Swiss. So I rest my case. Anything else, David, you want to say? No. That's it. Very quickly. Thank you so much for coming along. I'm sorry we have gone over slightly. Very, very quickly. quantum trading. Here we are. The indicators are, all the information about the indicators are over at quantumtrading.com. MetaTrader, Ninja, and TradingView. If you just scroll down the page, the individual ones come up. Just click on them, and it'll bring you to this page where you will have all the videos and the support pages, which just explain the indicators in a little bit more detail. You can buy them individually, you can buy them as a bundle, you can buy the complete package. As I said earlier, if you buy the complete package, when we develop new ones, they're automatically added to your package, and we're all covered by our 7-day money-back guarantee. And the education program is here. These are the modules that you get with the program. Very, very comprehensive, but you also get the bundle, the complete package. You then have to choose whether you want to use Ninja, TradingView, or MetaQuotes. And I think we're working on TradeStation very shortly as well. If you want any further information, you can always drop me an email, anna@cooling.com. I can't promise to come back to you by return, simply because I have literally hundreds of emails, but you do get an answer from me, I promise you. So you're more than welcome to drop me a line, or you can drop a line to david@quantumtrading.com. We're going to go and have a cup of tea. Sun's come out, and we are back at, what are we at? 3:15, David? Yeah, 3:15. So hope to see you then. If not, we're back next week. Take care.